What a massive, massive day today. An absolute ripping green candle to the upside after Trump announced that he is pausing these tariffs for a majority of the countries down to 10%, except for China. There's a 90-day pause, and as of 2 days ago, that this was fake news, right? But now it's real coming from his mouth, all right? So today in this video, I want to go over what's going to happen next. That's the biggest question for a lot of folks is this is the bottom? Did I miss my dip opportunity? Are there still more opportunities to buy lower? Are we going to rip back to all-time highs? This is our first signal from his mouth to give some relief. So we have two things that are happening. We had an oversold market that was due for a relief bounce. And that relief bounce was only going to come from some type of positive news, which was from President Trump. All right, today. So with that being said, let's jump into today's video. Would love to have you inside of our community, inside of Leverage University Discord. If you want some one-on-one consults, or if you have, if you're a complete beginner and want to take our boot camp, we run it once a month. It's a live 3-day boot camp virtually that you can understand these stock market moves, understand trading, where to buy long-term, how to protect yourself, all the little ins and outs, nuances that you hear me kind of going through very simply on these YouTube videos. All right. So without further ado, let's jump into it. And I will show this a little bit later, but we have Trump tariffs. Okay. So drastically reverse course, dropping his specific tariffs down to a universal 10% rate for all partners except China. He also gave a rate jump to 125%, which is technically bearish, right? We thought that that negotiation deal, if China didn't come to the table and wasn't willing to negotiate, Trump was going to up the tax, and he did, right? But what he did also today was gave some relief to the market by saying, hey, I know a lot of countries need some time to come to the table. Y'all been cooperating, so to speak, in his words, and y'all are tripping out, y'all are bugging out, y'all are stressing. So I'm going to give you a little bit of breather to get yourself together. Okay. That is essentially what he's saying. And what do you want to call it? Manipulative? You want to call it the great art of the deal? You want to say he's the great negotiator? Whatever it is, he gave some relief to the market today solely in his words, which is wild to think about. He has more power than Powell right now as far as what the stock market is doing. Okay. White House advisors claim the flip-flop was always the strategy, suggesting that the past week of massive tariffs that triggered this huge market loss was all for show. I'll just leave that right there. The next big headline was, this is a great time to buy DJT. All right. So this man is now giving signals. He's now telling us when to buy. He told us about the tariffs. He said he was going to do it. He said pain before pleasure. And it's just the start of this whole roller coaster that we're on. So if y'all are trying to jump on the train with me or, you know, with somebody, hey, I just don't want to do this thing alone, then you're in the right place. All right. We'll keep you updated here on this channel, as well as various other channels that you may watch to stay informed, to get different perspectives. Okay. The final thing here I want to show from a fundamental, meaning a news standpoint, is the question. The question you have to ask is, where do we go from here? Because the tariffs aren't gone. This is just relief. There's still going to be tariffs initiated, right? There's still consumer prices that we have our CPI report tomorrow and our producer price index, our PPI report on Friday. There's still inflation data reports that still need to come out to show the Fed to cut rates or even to have a hint to cut rates. Now, there have been good signs, right? So who knows? Powell may jump on board. The Fed may say, hey, we see it. We're going to cut some rates this year. Okay, so we still got some things in the way, and I'll show you on the charts when we get there. So this is a headline, or excuse me, Subu Trade, shout out to him on presenting this here. S&P 500 closing at a 200-day low, which we just did, okay, on the 8th of April. Then greater than 97% of stocks go up the next day. That's what happened today, okay? So we never know what it's going to be. Is it going to be some crazy AI news from a tech company? Is it going to be Trump, right? Is it going to be what we don't know, right? It's a black swan event that comes out of nowhere and injects money back into the market. Or like the last couple of weeks, last month, takes money out of the market. Okay. So you can see here on my left, on this y-axis, that we have our dates. Okay. This is when we drop below those massive crashes or those 200-day lows and what we did the next day. So you can see here that the following day after those big moves, or we closed below that 200-day low, we had red, 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 red. And then I would say these are pretty flat, okay, overall. And you can see the average was flat one day later, okay, slightly negative. All right. 2 days later, we started to recover a little bit. Okay. There we go. Still flat. So essentially consolidating or chopping around for 2 days. 3 days later, flat, flat, flat. So what do we do this time? Which type of day are we going to have tomorrow? Are we going to have a flat day? Are we going to have a significant red day where we give up maybe, half the gains back, right? People take their profits, things like that. We give all the gains back. We don't know. Okay. Or do we go up higher and close higher again? That's the question. So question number one, or excuse me, signal number one was today. We recovered, we relieved, we closed strong. How do we remove ourselves tomorrow? And then that will tell us the telltale about where the actual bottom is. Okay. So if you want to be better at understanding where the bottom is, we have to have consecutive days or consecutive weeks of showing higher lows. Okay. So let's jump straight to the charts and I'll show you what that looks like on a chart. So if I go into a daily time frame here, okay, what you'll see is that we're still forming lower highs. Okay. And if you look at this, we're still forming lower highs. Okay. So we have not actually broken out to change trend just yet. Okay. This is simply a massive relief squeeze bounce, which was due. Now, how big the squeeze, no one ever knows. Right. And today it just happened to be absolutely massive and historic. Okay. So you can see that we filled those gaps that we created with the tariff news where we kept gapping down, gapping down. Here was that first fake news spike. Here was the gap up and we gave it all back. And then we finally started rallying once that news came in. Now, what I want you to pay attention to here is that this wasn't all sunshine and rainbows when we opened the market today, because we closed and fell below this 504, or if you want to put it just underneath 508 level. Okay. So we had multiple rejections, failure, 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 and we had still lower highs. So when I saw this morning that we popped into that level roughly at 505 and failed it, right, we were looking for a slight retest of the low. I'm not looking for much more, but when you're trading more specifically, I'm not talking about buying the dip, because we signaled that in our community. Okay. We signaled that in our shares and leaps. We have dip buys, SOXL, AMDL, your favorite tech stocks, HIMS, Hood, RGTI, your ETFs, your VTI, VOO, SPY, QQQ, whatever you bought. Okay. I'm talking about trading more specifically. Okay. And timing the bottom. No one can ever know when that bottom is. So until it tells us otherwise, that's what we're coaching or teaching on this specific channel is, okay, how do I strategize? Because I cannot beat the market. I just want to be on the right side to participate and get my 2 cents. Okay. However much that 2 cents is. So with that being said, you see here that this morning, right, we popped down. We tried to pop up in the first 30 minutes and we formed another lower high right there. And we closed fairly weak right there underneath that 494 level. Okay. Now we did reclaim the next candle here, which, kind of dismissed this whole downside, but ultimately was looking for another lower high and maybe a continuation. And it never did that. So after a while, I got a little bit iffy because it chopped around for a while. And anytime I see failure to go lower, right, or on the reverse side, failure to go higher, right, you've got to trust that that's what it's trying to do. So on a 15-minute and a 5-minute, I was seeing this that was starting to form. This chop fest, chop fest, chop fest, consolidation, right? And we were just looking for which way it's breaking out. And once it kind of broke out of that right there, right, I was looking for it to retest maybe that 508, maybe 510. That was a heavy level, right? Right here, right there, right there, right there. 508, 509. Okay. On SPY. And then maybe just chop around, maybe try to retest the low one last time before ripping. Maybe CPI, PPI was going to rip that, not expecting that Trump was going to come out and say something. Okay. So if you bought shares, you're winning. But as far as trading goes, right, it was a little bit iffy about where the upside, or if the upside was coming, because it was still forming, in my opinion, based on my trading style, right, forming those higher lows and rejecting and rejecting and rejecting. Okay. So otherwise, now we've got to change a little bit of sentiment. So with that being said, I want to show you really quick before I jump into the sentiment what I'm talking about and why I'm saying that. It's because I have some of my clients and some of my community members that are on here that here's the rationale of why you take the trades. Okay. You trade based off of what you see. So this morning I saw Palantir, right? Still rejecting underneath and failing underneath that 80. Okay. Pushing back down for a little scalp back down to 77 and was trying to retest at 75. This was at the same time that SPY and QQQ were rejecting. Okay. NVIDIA, same thing. Underneath the moving averages, failing back underneath 100. It got back underneath 98 and it got a nice candle push, right? Was looking to fill that little mini gap up right there, maybe target roughly about 95. So every trade that I signaled here was 30 to upwards of 50% very quickly. Okay. You can see there all signals green, roughly. I'm on PST. So 6:30, 7:30, roughly about an hour and a half into the market. Okay. Now runners, meaning the final contracts that we had in, I was looking to see if it can continue. So there was Palantir continuing. There was a trade idea. There was NVIDIA continuing, was trying to target this low here. But you see, I had it marked. That yellow line was where we could get stuck, right? And then AMD was trying to target roughly these lows again, very similar to what it did here, but it got stuck at 81 one more time, okay? So I was looking at that rising wedge. We gapped up, was looking for a continuation back down to these lows, and then we can have a 1-2 failure to go lower, triple bottom, and then rip, okay? So this was just a little scalp. All the trades were green, but then out of nowhere, our runners, or maybe some of my clients and members that are still watching this, right? You're like, Brian, I stayed in my full position. I didn't take profit because I was seeing the same thing, right? So shares offsetted this, but the trade, hey, it was green. It was break even. It may have turned red. And that's what happens. If you had the right position size for the trades, then you're okay. If you had stop losses, you're okay. All right. So just want to share that for transparency about what we did inside of leverage today and what we were looking at when the market opened. Okay. Now that this has happened, this is kind of my signal. So do you see that we were rejecting right there at 526, 526, underneath 525, and now we have broken above, retested, and now this has become a level of support. Okay. So what I'm looking for tomorrow, and to summarize this whole video, at the very beginning, I said it's going to be very key about what we do the next following day. Okay. And CPI is going to have a lot to do with that. Now, I do expect us to retest or try to retest at least that level. Okay. Because anytime you have a news spike, it's not a true move. Okay. It's not a true move because it wasn't necessarily expected or quote unquote priced in. So with that being said, this move was not expected to happen. It was a black swan news event out of nowhere. Trump comes on and says this. Okay. So when that happens, most individuals are going to be probably trimming their profits depending on where the resistance steps in. So you want to watch for a pullback into this 525 level, ideally. Okay. Pull back into that 525 level. And if I do a Fibonacci retracement, that should be roughly 50% of that move, right? So take back 50%, and then we should be able to try to retest the high to go higher. That is my idea of a break, retest to go higher. All right. So that is the number one thing that you would want to look for if that happens based on what CPI does in the morning. Okay. I'll give you an alternate scenario. Well, Brian, what if this doesn't hold? That's a little concerning. Okay. Now, I'm not thinking this way until something drastic happens because I'm just trading what the market's giving us. And right now, it's giving us very bullish momentum. But if that breaks back underneath that level and we turn that back into a rejection point and we can't get back above, then that's a little scary. All right. And that's what I was talking about when you saw this graph, this day after right here. Okay. So you got to be prepared for market volatility either way and adapt, right? Like I said yesterday on my video, I said, be adaptable, be flexible. We could rip back off the highs and squeeze. We could continue lower, right? And you just have to adapt and keep your position size lower. If you are trading more specifically, it's very easy for my dollar cost averaging, turn on recurring buy the dip, hold. That's easy. But trading more specifically, that's what I'm talking about. The levels matter. Okay. So top end of the levels would be roughly around, I'll be watching this 550 level here. Okay. And I know there's a gap. These are my gaps that I can show. So gaps like to get filled. Okay. That first gap got filled right there. Now, this is a key resistance from former support turn resistance. So 550 is going to be very important about what we do. You can see after hours, we're at 545. Okay. So we're already, the futures market already kind of just, slowly pulling back just a little bit here. Nothing much to write home about. So that 550 level is the first level of resistance that you want to pay attention to, that if we start to get weak or if the CPI data pulls us back immediately, you want to take a look at that. Now, Brian, what if CPI data comes in soft, which means more bullish nature, comes in well? Then we can rip up through that gap and start getting up to these top end of the levels, which would be 570 would be the next level I'll be looking at, 565 and 570. So let me draw this right there. Okay. So to trade this, if you want to trade the upside, right, I would not personally touch upside unless you see a pullback. Just my recommendation, risk to reward. Okay. If you get in a call up here, you may be able to scalp it, but that is your risk to reward ratio. That's how that looks. So a little bit of reward and a lot of risk if it turns around. You want this to happen right here. Ideally, if you're looking for calls, you want to let it fall, see if it holds a level that you like, and then you can define your risk at that level around 525. Okay. And then you would take it up. Now, Brian, what if I don't trade SPY or QQQ? You correlate that with where the stocks that you like to trade are. So you can go to any stock and chart it. I can go to Apple and chart the breakout, which would be pull back to 190 and see what that does. Right. 190 or failure back underneath 195. See where that holds, but it would be right around 190. Amazon, it would be pullback, same chart, looks the same right here, would be pullback into that 185 level. Okay. Right there. Pull back into there if possible, or it's just going to squeeze up and fill the rest of those gaps. Tesla, okay, we want to watch 270. You see this heavy level right here, 270, 270, 280, right? Tesla could pull back into that 250 level if the market gets a little bit weak and wants to pull back. So watch that 250, 255 level, which would be right around in here, maybe 260. Okay, so ranges are very wide. Just watch for SPY and QQQ to pull back to those levels that they broke out. Okay, you see I've already turned them green on QQQ. That'd be 445, and that psychological level of just 440 and 442. Okay, we'll be right in this range. Okay, so fill the gap. You'll see in the morning for CPI, or pull back ideally here. Okay, for calls. All right. Be patient tomorrow. It is a Thursday. Maybe if you're trading alone or trading in a group or whatnot, consider next week contracts. If you're not savvy enough to trade weeklies on a Thursday, it does move fast. You don't have time on your side. So start looking at next week contracts if you just want to be a little bit safer about where things are going. All right. So I'm not going to chart out everything here, but I'm going to keep a watch out on everything looking roughly the same. All the pullbacks correlated to where SPY and QQQ are going. Okay. So that is my idea tomorrow. It's all based on CPI, which comes out at 8:30 Eastern Standard Time. So watch that in the morning, 8:30 Eastern Standard Time, an hour before the market opens up. Also, we have earnings on Friday with JP Morgan. We have Morgan Stanley. We have BlackRock. We have our financial earnings, Wells Fargo, coming out on Friday. So that will definitely spur the market in one direction or the other. I'll tell you my ideal scenario and then I'll let y'all go. I would love, and y'all gonna kill me for this. I would love for this to just be a pump and dump. You know why? Because ideally, I wanted to retest and fill some of these gaps down here to 580. I wanted to retest that 480 low one more time to load up the boat and just confirm it one last time, not on a news pop. All right. That's my ideal scenario, is push as high as it can, right, through this good news and whatnot, and then give it back, and then we pick up more dips on discount. Like I want NVIDIA at $60, $70 again, stuff like that. Okay, to pick up more. All right. Please be mindful. As you can see here, I think I already mentioned it, but I just wanted to keep it in mind. All right. We're still on lower highs. Okay. Still on lower highs. So we need to clear back above these levels, very similar to this little mini pump here, right there. You see how we pumped and then continued. This is just a bigger relief bounce. And then do we have some type of, pullback once it settles into where the top is? Okay. I'll show you what it looks like in 2018 on those levels. Okay. There is February and there's the fall. So here's a little bit of a weekly pump right there. Relief bounce right here. Continue a little bit higher and then give it back a little bit lower again. Or we grind higher like this throughout the summertime, those 90 days. We get back either to retest the highs, we could, and then we give it all back again. Okay. Because the tariffs are still in place, right? So a lot can happen. You see this whole sector is 2018 tariffs, and then there's 2020 right there, right? So still a lot of uncertainty, still some gaps to fill below, right? And still some levels to retest. So we'll see what happens. But this is a bullish engulfing. This is a retest of this high-end level here, right at where we rejected before, which should have been right at this daily 20, which is very, very important. So you see all those moving averages, we're still technically below. All right. Still a lot of pressure below. All right. Love you all. Hopefully this helped give you some insight. Futures market down a little bit after hours. We'll see what happens in the morning. Trade safe. I'll see you all in the Discord tomorrow. If you need any support, please let me know. Put some comments down below what you think, right? We're bullish until told otherwise, but we still got to keep the bigger vision in mind that we have lower highs. Where are we going from here? Keep some cash on hand to pick up more dips. I'll talk to y'all soon. Have a great one.